As America experiences a protracted bull market, Russia before and after MH17 lives a sustained, nasty bear market. Many strategists and investors run, suggesting a Russian value trap. Mark Mobius of Franklin Templeton sees opportunity in his decades of study on emerging markets. He suggests that Putin's Russia staggers into 2015, but there can be a better time ahead. Mark, I want you to defend investment in Russia right now. If there is global outrage against Vladimir Putin, does that change your investment strategy?
Not really. I think this outrage will probably continue for a while. And in fact, there's a good chance of sanctions being increased. I think foreign ministers from all over Europe are meeting in London today, and they're trying to assess what's the next step for them. Very difficult because there's mutual interdependence between Russia and Europe, as you know. My feeling is that if the price is right, and many of these Russian stocks are looking very attractive, in 2 or 3 years, we'll get some benefits because the market will recover and the whole situation with Ukraine will have been worked out.
Mark, we asked you in early June who impressed you the most so far this year. Here's what you said.
I don't know whether I should say this, but maybe Mr. Putin.
Why is that?
Because he's shown a great deal of control and restraint by being very logical in his decisions.
Very logical in his decisions. Given the events of the past couple of weeks, do you still hold this view of Mr. Putin?
Yes. I mean, the whole strategy is to take as much as you can without any consequences. And if there are consequences, to logically pull back. That's the reason why sanctions are so important if they impact on the Russian economy. So there's a good chance that if the Europeans pull off a very strong set of sanctions, then logically Putin will pull back.
Hey, Mark, about a month ago, Jim Grant of Grant's Interest Rate Observer came on our air and was really pounding the table on Gazprom, the big Russian oil company, saying it's too cheap at 3.5 times earnings. He took heat for that comment just because of the emotions of investing in Russia. Have you taken any heat for your willingness to actually put capital to work and buy Russian stocks?
No, not yet. Surprisingly, we haven't really gotten many negative feedbacks on that. In fact, none. We haven't received any negative feedback because I think, generally speaking, the people who invest in our funds are taking the long view as well. And they know that Russia is going to be around. The Russian economy will eventually recover. Of course, it's not doing too well now. And there's a good opportunity to be in that country.
Can you share with us, Mark, some of the names you're buying?
The key name, of course, is Norilsk Nickel, Lukoil, the oil company, and Sberbank. I would say those are the three most noteworthy names that we would be looking at.
Mark, what would you expect other institutions will do? You have a terrific and earned remit at Franklin Templeton. Would you suggest that institutional investors worldwide will be demanded or forced to sell Russian shares?
That's a very, very important question because if U.S. sanctions include that, then the game is over, at least temporarily. I think it would be a very difficult move and one that would be probably the very last step. I mean, that'd be very close to hot conflict.
Mark, we showed this emerging market triple threat that faces the region. How different are conditions this year compared to last year?
Well, the situation is completely different because, first of all, China is launching a 10-point reform program, which is going to be revolutionary, in my view. They're going to allow private enterprise to go into areas where the government enterprises had monopoly positions. They're going to encourage private enterprise to establish financial institutions. So the credit expansion is going to be tremendous. And the government, of course, is pumping more money into the economy. Then if you look at India, you see the reforms that are going to take place there. Indonesia, another case of reform with a new president who's reform-minded. So a lot of exciting things happening. And my feeling is that there's no shortage of money. There's a tremendous amount of money. If you look at the loan-to-deposit ratios of banks in the U.S., in Europe, in Japan, in China, they're all down. So there's lots of ammunition there for the markets to move.
And you're referring to shadow banking, all the non-bank lending and financing that's unregulated, and how, as a percentage of GDP for the U.S., for Japan, and Europe, it's so much larger than it is, say, for China, where there have been all these dire warnings of the financial system collapsing.
Well, Mark, to be direct here, is the emerging market system over-leveraged right now? That seems to be a great debate.
No, not at all. There's an awful lot to be done in terms of leveraging up. Of course, if you look at the loans in the system, you'll see that consumer loans are still a very, very small part of the banks.
Right.
That is expanding, and of course that will give a tremendous impetus to the government.
Right. Mark, let me ask you another question, which I think is profound. Can I invest in your world through U.S. multinationals?
Good idea. In fact, in our emerging market funds, we have invested in some of these global multinationals who are becoming emerging market multinationals, because over 50% of their earnings are in emerging markets. Good example of that is Unilever.
Yeah, certainly is. And people forget Las Vegas Sands, which carries the name Las Vegas, actually gets 2/3 of its business in Asia. I'm curious, when we talk about multinationals, the relationships between nations, how concerned are you about what's happening in the South China Sea, China versus Japan, China versus Vietnam?
I'm very concerned about that. I mean, that could turn into a very nasty situation. The good news is the Chinese have pulled back. If you notice that rig, which was in waters which Vietnam claims have been pulled out. So I think the Chinese are going to be very cautious about this.